Hello everyone, I hope you are doing well. Today in this episode we're going to talk about getting a mortgage in Canada. So today I have a very special guest with me, Mr. Deren Hasip, and he will explain us how to get a proper mortgage in Canada. Hello.
Hi.
How are you?
Very good, thank you. Thank you for having me.
Yeah, I thank you too. So lots of people trying to get mortgage in Canada, but
Yes.
They also have lots of problems and troubles.
Yes.
So we would like you to explain us step by step how to get a mortgage.
Absolutely. So it's important to make sure that you're sitting down with a professional first and foremost and getting pre-approved in advance. And pre-approval is one of the most important elements in getting set up because that's going to give you an opportunity to sit down with a professional who's going to confirm all your financial details. It's going to make sure that they're validating your income. They're going to have an opportunity to take a look at your assets. And they'll have an opportunity also to check your credit. These are vital elements in helping determine what is and isn't going to be possible. What's important about a pre-approval is that not only does the person you're sitting down and speaking with help gather all the information, but they also organize and present the information to a lender. And why that's important to a customer is twofold. First, it's going to give an opportunity to not only have the specialist you're talking to give their opinion on your circumstances, but it's also going to help further validate that an institution or a bank has also reviewed your information and given you that green light that you're okay to go ahead and proceed. The other important factor in the pre-approval process is that it will also help hold a rate for you. And that's really important, especially today, because we're in a rising interest rate environment. So by having a conversation with a professional, getting formally approved by an actual lender gives you the ability to get your information validated and hold a rate. So if the rates continue to rise, you've at least taken some of the risk out of that raising interest rate environment, period. Once the pre-approval has been secured, you can at least know what your budget is and what you can afford to go into the market, depending on the type of home you're going to buy. Now, it's important to be mindful of what kind of homes you're buying because, if I'm buying a condominium is going to have different expenses than if I'm buying a freehold home. Because condominium have common fees for, maintenance, pool, and things of that nature, where a freehold home doesn't have that fixed cost. So once you've actually gone into the offer to purchase, when you're working with your real estate agent, then that documentation comes in. And at that point, we look at the pre-approval that we have with the lender that we already originally pre-approved you with, and we compare that pre-approval to the available deals in the market. Now that's important when working with a mortgage broker because when you're pre-approved, you're essentially pre-approved with a particular lender, but what's unique about working with an independent mortgage broker is that an independent mortgage broker has access to potentially over 50 lenders. However, most of those lenders don't offer pre-approvals. So in the initial assessment, our objective is to validate the information, get a lender on side, and hold and secure a fallback position. When the deal goes live, we can look at that fallback position to see how competitive it is. And if it's competitive, we go to that lender. However, if there's a better deal in the market, we can then go to the different lender and find the better deal. So the objective in the next step is secure the approval relative to the property. And then at that point, once we have the approval back from the lender, we'll have an opportunity to review what conditions the lender has given us. Once these conditions have been essentially satisfied, the next part of the process is working with the lawyer. So the lender will instruct the lawyer who's going to carry out the mortgage registration process and then complete what conditions have been stipulated to the actual lender and complete the transaction. That's the point at which the customer is going to be depositing the rest of their funds combined with the mortgage proceeds to be able to complete the transaction.
So what are the common mistakes in the process in getting a mortgage, like people do?
That's a great question. First and foremost, don't apply for more credit. One of the biggest mistakes people make is in the approval process, is they'll apply for a car loan or a car lease, or they'll sign up for something else that's got a regular monthly payment. And the problem with doing that is that everything is budget based. So if you sign up for a new loan that's going to have a payment associated with it, that payment is going to reduce your borrowing power. So it's really, really important to make sure that you're not doing that. The other mistake that we've seen is changing of jobs. Never change jobs in the middle of the pre-approval process or the mortgage approval process. And the reason for that is one of the key factors that lenders look at in mortgage approval is the stability of the customer. So the stability of the customer from not only from where they reside, but more importantly, where they work, how long they've worked there, and how consistently they've had earnings. So if in the middle of the application process you decide to change employers, it could be problematic and it could compromise the approval. So we always suggest don't make significant career changes in the middle of the approval process. Anticipate this. The other thing to be mindful of, especially for customers that are relocating to Canada, is the movement of international funds. It is super important to make sure that money that is coming into the country from outside of the country comes in and is on deposit with your respective institution in a Canadian bank for a minimum of 90 days. Because the lenders are going to look for this. And the level of scrutiny that a lender applies if money is coming in internationally is a lot more work and can be pretty tedious and frustrating for customers. So what we tell them is, if you have any assets outside of the country, if you have real estate outside of the country, and you're planning on using this money for down payment purposes, sell it, bring it into the country, put it into a Canadian account or a Canadian investment, and let it sit there for at least 3 months so that you can minimize the amount of documentation you have to provide to the lender. And lastly, always make your payments on time. It might sound like a simple piece of advice, but one of the key things that drives your credit score is how often you make and making your payments on time. So it might sound simple, but a simple payment that's missed by 30 days, even if it's $15, can have a significantly damaging effect on a credit score. So it's important to make sure that you're always making those payments on time.
What's your personal suggestions for the people who are looking for a proper mortgage, like according to your experience? Your personal advice.
Yeah, I think what's really important in the process, first and foremost, is a budget. You need to sit down and you need to make sure that you're working with a professional and having a discussion about how much money you have, what you're going to afford to pay on a monthly basis, and that we make sure that we're setting you up to succeed so that you don't end up in a situation where you're house rich and cash poor. So the budget's going to be super important. The other piece of the process is before you go shopping for a mortgage or looking for a new home, make sure that you get pre-approved first. Getting pre-approved first is going to guarantee that all your information's been validated, you've submitted to a lender to get an actual approval that's been confirmed by a lender, and you're also holding a rate so that you can take a little bit of the risk out of today's environment because rates are all over the place. So that securing of that pre-approval is going to be very, very important. It's important to make sure all your documentation is in line as well, especially as it relates to your down payment. Sitting down and establishing how much money you have available for down payment, making sure that you're solving for the minimum down payment levels, and equally important, you understand the closing costs associated with the transaction. So your lawyer's fees, your land transfer taxes, these are the types of things that you need to be mindful of in the actual process. And last but not least, insurance. Insurance is something that a lot of people don't really think about, but it's something that is absolutely paramount. A lot of times there's two people that are involved in the buying process, and the last thing you want to do is have a devastating event where one partner is lost and the other person ends up inheriting all the debt. So just having a discussion about insurance and making sure that you have a solution in place that if things don't work out and you fall ill or you can't work anymore, you've got insurance that's going to help you through those difficult times.
What about first-time home buyers? I know that there are some benefits from Canadian government for the first-time home buyers.
Yeah.
What would you like to tell us?
That's a great question. First-time home buyers should know all the different programs that are available. Some of the most popular programs that are available today for first-time home buyers is a first-time home buyer withdrawal program. For any customers that have money in registered retirement savings plans, you have the ability to be able to take out up to $35,000 per participant member towards a down payment on a tax-free basis. So if I've got an applicant and a co-applicant, there's two people, and the money is in the RSP already, you can take that money out for $35,000. So between two people, that can be up to $70,000 in down payment, which is a very substantial sum of money that can help customers get into home ownership sooner. Important things to understand about the program. First and foremost, you must be a first-time home buyer, so you cannot have owned a home in the last 5 years as a principal residence. The other thing to be mindful about the program is that any money that is in the RSP must be there for a minimum of 90 days before it can be withdrawn. So we've had customers that are newer to the country, that have been around for a couple of years, and they find out about the program. Now, there are limits to what you can contribute into the program, so you have to look at your tax documents to make sure you have enough room to contribute. And if you are going to contribute, the money must be there for at least 90 days before you can take it out. So be very mindful of these parameters. And then what happens is you're basically borrowing money from yourself. The program stipulates that you have to repay this money back to yourself over 15 years. So your first year is a grace period where you don't have to make a deposit. And the second year, so the 15 years thereafter, you will be able to have to put back 1/15 of that money every year as a repayment. And by doing that, there's no tax consequences. If you don't put the minimum amount back, that minimum amount that year will be considered taxable income. That's one program. The other program is land transfer taxes. So in the province of Ontario, there is a land transfer tax every time you purchase a piece of land. But as a first-time home buyer, there is a rebate program where you can earn up to $4,000 in rebates from the province of Ontario. And that there is a formula for this, so it's a tiered formula. It depends on your purchase price. Very important to know, for those that are in Toronto, the City of Toronto has an additional municipal tax. So anybody buying in the City of Toronto is going to have to pay tax both on a provincial tax basis, and they're also going to have to pay in the City of Toronto. But the good news is that City of Toronto also has another rebate of up to $4,000. So if you're buying in the City of Toronto, you can get up to $8,000 in rebates as a first-time home buyer. And lastly, as a first-time home buyer, when you do your taxes at the end of the year, provided you haven't owned a home as a residence in the last 4 years, you can actually claim up to $5,000 in moving-related expenses when you do your taxes. So there's a tax rebate incentive as well for final year-end income tax that you can take advantage of. These are the three most common programs available in the market today that are the most utilized.
What's your suggestions for newcomers?
There's a lot of great new immigrant programs that are available through different lenders. So I think that first thing they should do when they're making their transition into the immigration into Canada is understand some of the systems. So you need to understand taxation. So having a consultation with an accountant to get a handle on how taxation works, I think is really, really important. You need to understand some of the saving vehicles. So as you start working and gaining employment, making contributions to things like RRSPs can help you create that down payment you need for that property. So I think it's going to be really important. So when you can figure out if your intention in the immigration process is to become a homeowner faster, you're going to need to understand a number of variables. There's 5 driving variables that every lender looks for in the pre-approval process. The first variable is job stability. So looking to secure employment for yourself is very, very important. If you're getting into a job that is salaried, verifying your employment is pretty simple because it's a matter of getting a pay stub and it's a matter of getting maybe a letter of employment. It's a bit more complicated if you plan on being an independent consultant or you plan on being self-employed. Really important to understand that. So job stability is going to be important. The other factor is capacity, borrowing capacity. A lot of lending in Canada is based on how much money you make. So, and it's household income. So if you're the only income earner, it's going to be based on your income. If there are other income earners in the household that are earning a salary, then it's going to be based on your combined income. And the income is based on your gross income, before tax income, not after tax income. So to give you a basic rule of thumb, the basic rule of thumb is your income before taxes times 5 is typically the maximum mortgage a household can afford. So if we have a household where we have a husband and a wife maybe making $50,000 each, so together maybe they make $100,000, the basic rule of thumb is they can afford about $500,000 mortgage.
Yeah.
So it's good to know that as a rule of thumb. The other thing for a new immigrant in the transition process that's super important, credit.
Credit, yeah.
Very important to understand that you need credit. Credit's a bit of a catch-22, however, because you have to have income to get credit, and you need to have status in the immigration process. And so one of the things that I suggest is a lot of lenders, especially Canadian banks, even if you don't have a job, have a secured type of a solution available for the customer, where if you deposit, say, $1,000, they can give you a $1,000 credit card held against the cash. It's really important for a newcomer to start their credit early, because credit is one of the fundamental pillars in determining whether you're going to get approved for a mortgage. So the earlier you open your account and the earlier you start the credit process, the stronger your credit goes as time passes. So it's really important to start that credit early. And credit gets driven by credit cards, car loans, student loans, line of credits, all of car leases. All of these facilities will help you build credit. And the thing about credit is it just takes time. So start early, which is going to be very important. The other thing about the immigration process is source of international funds. We talked about this a little bit earlier. If you have funds internationally that you're planning on bringing in, bring it in early. The earlier you bring it in, the better it's going to be there for you, because lenders are still looking for some stability. So and it doesn't mean that you have to bring everything. Immigration is a long process. Sometimes it can take years for you to sell real estate abroad. So bring in some of the investable assets that you have, get them into investments accounts here in the country, because you will find that lenders have easier guidelines for verifying income that's in the country versus the money that is outside of the country. So all of those factors are really, really important, and I would say to you, things to be mindful of in the immigration process. So the sooner you take those steps, the easier it's going to become to go through the immigration process and get settled in, get your first home, buy your vehicle, build your credit, and get established.
Thank you so much. It's a great information, great experience sharing with us. Thanks a lot.
No problem, my pleasure.
My pleasure too. So my guest was Mr. Deren Hasip today. He's a mortgage broker, and he explained us all the steps of getting a mortgage in Canada. Thank you for sharing your experience and knowledge with us.
My pleasure.
Thank you for watching us, and see you at the next video.